Welcome back. It's time now for Past Picks. Mike visited with us about a year ago, so let's call it about 11 months ago, 28th of November, 2023. One of his top picks on that day, CVS Health, one of the big players in the U.S. pharmaceutical sector. There you see the numbers, a share price difference of negative 17%, cushioned somewhat by the payment of a dividend, which brings the total return to negative 13%. Mike?
Yeah, we still own it. We still think that CVS has some great assets. Obviously, if I turn the clock back, should we have held it over the last year? No. But again, we think that there's been a bit of management turnover. There's certainly been some bad capital allocations. We don't think that the business is dead, and it's definitely fixable. And we think the new management team working alongside with the board is going to be able to fix it and right the ship. Okay. CVS was pick number 1 on that day. ONEX was number 2. These picks aren't in order of preference. They're just the order that Mike presented them to us on that day. Ticker symbol ONEX in Toronto. We don't, unfortunately, have a board to describe the return here, but you can see that over the past 12 months, this stock is up by about 32%. Mike? Yeah, we still own it. We still like it. We think ONEX is run by extremely smart people. We think, if you look at the Q2 report, they've got, call it book value, if you will, of about $150.
Right.
And this thing is trading at $100. Right. So, we believe that at some point the value is going to compress, right, because that's just too big of a discount for this management team. And in the meantime, they've been very good acquisitors of their own stock, especially when the stock is trading at a massive discount to the value of the business.
And there you see, there's our board that summarizes the numbers since Mike made this recommendation. You can see the total return positive 10%. And that's when ONEX releases results, you don't pay as much attention to earnings per share as you do to book value, correct?
That's right.
That's really the way to look at this company.
The book value or the capital that ONEX has.
Right. Okay, and number 3 on that day, Manulife Financial, MFC in Toronto. Here we see some very positive numbers. I think viewers will be familiar with the trajectory of this stock over the past year. We're going to see it in just a second. Total return here, 65%.
Yeah, Manulife is a stalwart. Interestingly enough, the stock price is now just coming back to the peak that it hit in 2007. Yes. But this is a very different company, very different balance sheet, great management team. We like the Lifeco business. Though maybe at this point we're going to be starting to look to divest. Because it's no longer very cheap compared to when we bought it. Those are Mike Vinokur's past picks. Look at that run on Manulife that has taken place. You can see it bumped along sideways for about 9 years and then took off in the most recent year or so, up over that period of time, 95%, almost all of that gain in the past year. We'll be back with Mike Vinokur, portfolio manager at MV Wealth Partners at IA Private Wealth. He'll resume taking your questions on North American large cap stocks.